Thanks so much for joining in. The stock is up and about in today's trading session. Could you tell us what's the outlook for FY18? I believe that, in fact, you're targeting revenues of around 300 crores, margins of around 18%. How is this likely to come about? Do you have some more approvals that are coming in there? And also, what was your current margin? How is it going to be moving to around 18%?
Yeah, hi. It's Rahul here. Thanks for having me. Yeah, we are looking at a 305 crore gross revenue this particular financial year. Basically, the year has started off very well. The off-season placements that we normally do in the summer season have progressed phenomenally as per plan. And of course, the monsoon outlook has also been updated to almost 98% of average. So both of these put together, the off-season placement as well as a normal monsoon, we are fairly certain on the target revenue that we are expecting. Our margins also have in the last 1 year increased significantly. One of the major reasons for that has been that we've started making a lot of our products which used to be imported over the last several years now in India. And these made in India products that we now make at our own facilities have significantly better margins because our cost of production has reduced. Both of these put together, of course, we are able to currently move from about an EBITDA of 14%. I think right now we're about 14 to 15% in our EBITDA margins. We're looking at getting that up to about 18% during the current year.
Okay. Hi, Rahul. Good afternoon. First, let me get back to the top line point. You're targeting a revenue growth of close to about 12% at 305 crores. How much of it would be on account of the new products that you're planning to introduce, 8 new products in the micronutrient space, and how much of it would be pure organic?
Actually, the new products and the existing products will both total add up to about 305. What we are looking at is the new products typically take a couple of years to establish themselves because it's a highly concept selling industry. And therefore, in the very first year, you can't really look at very significant numbers from the 8 new products, but they typically play out in year 2, year 3, once the concept has been very well established. So in total, yes, we will be looking at a total revenue growth of the 305 number, but that would include the new and existing products as a basket.
Okay, and what percentage of your products are now made in India, and how much could you increase that percentage higher?
Well, we used to import almost close to half the products used to be imported from our domestic as well as from our international facilities as well as from other suppliers. All our flagship brands which we used to bring in from the Emirates from our subsidiaries will now actually be made in India. So typically, I think we would be almost 75% made in India now.
All right, Rahul, I wanted to ask you about a couple of aspects that have, really gained all the headlines yesterday and as well as today this morning. GST, the implementation is likely to be a benefit to you. Tell us about that, how much of a benefit it could be as per your reading. And also the second part, there has been a lot of agitation by farmers in Maharashtra as well as MP. How big a risk is it to this revenue target, these margins that we're talking about? Run us through some numbers, both these two aspects.
Sure. As far as GST is concerned, I think over the last 5 to 6 years, our VAT and excise duties on our products rose steadily. Okay. So therefore, we went from almost a 0 tax rate to almost an 11.5 over the last 5 to 6 years. Okay. So effectively, whatever had to be increased already got increased over the last 6 years, and therefore this year with a 12% GST on our fertilizer products, the impact actually in terms of the total percentage is almost negligible. However, there's not going to be significant increase to the market. However, our set-offs will be much higher than before. Because, we used to lose some set-off in terms of VAT, whereas that you will get a complete set-off in terms of GST. So therefore, in total, we don't see the total GST percentages actually increasing in our sector, except for 1 or 2 select product groups. Most likely, it's almost equal to the revenue, the GSTs, the VAT plus excise we used to pay in the last few years.
Okay.
Now, coming to the farmer situation, yes, it is there is always a risk of the monsoon as well as, farmer agitations and so on. However, right now, what we see is things are settling down. I think government is taking some action in terms of, debt waivers and things like that. But yes, something going on in our segment where our farmers are not very happy with the current situations. I guess that does create a temporary lull. But ultimately, the farmers are looking at increasing productivity. and our products do exactly that, and therefore at some point it all evens out.
Okay, Rahul, running out of time, but if you could quantify the temporary cost pressures that you're facing on 2 to 3 products, what impact will it have, and how much of the raw material costs gone up by?
Well, actually, we are holding inventory, a good amount of inventory. Normally, there are export duties that are imposed on certain raw materials in this time of the year. So to buffer ourselves, we have a significant buffer of inventory with us. So therefore, by the time this inventory runs out, I think this cost pressure should have dissipated. Right now, there's a negligible cost pressure because we already have stock in hand.
All right, Rahul, thanks so much for joining in and giving us all those details.